Your paycheck says you're making more money this year. But if you've ever felt like your paycheck doesn't go as far as it used to, you're not imagining it. In fact, the reason might be hiding right under your nose: inflation. But not the way you think. Inflation isn't just rising prices at the store. It's a silent force at work behind every dollar you earn, and it's been in your paycheck the entire time. Let's dive into how this hidden power is quietly reshaping your financial life without you even realizing it. Right now, inflation is a top-of-mind issue. Prices for everything are skyrocketing: groceries, rent, even those little impulse buys you once ignored. You've probably heard your friends, your coworkers, or even your boss talking about it. But here's the catch: the inflation we're all talking about is just part of the bigger story. The thing is, most people don't realize how inflation isn't just about what you're paying, it's also about what you're earning. More specifically, it's about how the value of your paycheck is slipping through your fingers, even if the number at the bottom keeps going up. Think about this. If you're getting a 5% raise this year, but inflation is running at 8%, you're actually losing purchasing power. Your pay increase isn't keeping up with the rising costs of everyday goods. And in some cases, it's even worse. But why does this happen? Let's break it down. Inflation is the general increase in prices, everything from a loaf of bread to a car. But what most people overlook is that inflation isn't just about prices rising, it's about the value of your money shrinking. Here's an example. Let's say you earned $50,000 last year. Today, you're making $52,000. Seems like progress, right? But in reality, your $52,000 doesn't go as far as your $50,000 did last year. If inflation was 5%, that $52,000 is only worth about $49,500 in today's dollars. You've just been handed a raise, but you're still behind. It's like being told you're getting more cake at a party, only to find out it's smaller slices and bigger plates. The numbers look good, but the value isn't what it seems. So where does inflation actually come from? Here's the kicker. It's not just the prices you see at the store. Inflation starts much earlier, deep within the economy. It begins when the government and central banks decide to print more money or keep interest rates low. More money in the system can cause the value of existing money to fall. It's the classic case of too many dollars chasing too few goods. The trick is, inflation doesn't affect everything equally. Some prices rise faster than others, and wages often lag behind. So if you're getting raises that don't keep pace with inflation, your standard of living gradually erodes. And here's a weird truth. This whole system works because we've agreed to it. Think about it. When you take that paycheck, you're essentially agreeing that the money in your pocket will still be worth what you think it is, even though, in reality, it's worth less. Here's the absurd part. We live in a world where inflation is the invisible hand that shapes the value of our money, yet we rarely talk about it. Instead, we focus on headlines about stock market crashes or the latest tech IPO. But inflation, it's right there inside your paycheck, quietly eating away at your financial future. Imagine you're running a race. The finish line is moving, but no one tells you that. You think you're gaining ground, but with every step, the finish line is just a little bit further away. That's what inflation does to your purchasing power. It keeps you running, but the goalposts are always shifting. If you watch the news or scroll through financial headlines, you'll see a lot of buzzwords like robust recovery, rising wages, economic boom. But the reality for most people is different. Wages don't always rise at the same rate as inflation, and while the economy might look great on paper, the average person feels it in their wallet. You're told that inflation is temporary, that things will calm down soon, yet every year the price of goods seems to climb higher and your paycheck doesn't seem to stretch as far. There's a mismatch between what we're being promised and what's actually happening. In fact, inflation can keep you on the hamster wheel, where you're always working harder for less. So what does this mean in the grand scheme of things? If wages can't keep up with inflation, and inflation keeps eating away at your paycheck, then what happens to people who live paycheck to paycheck, or worse, those who don't have much to save? It's a ticking clock. Inflation eats into savings too. If you are saving money in a bank account with an interest rate lower than inflation, you're actually losing wealth, even if your savings grow in nominal terms. The cost of living rises faster than the interest you're earning, and over time, that money becomes less valuable. And for the long term, this problem becomes even more pronounced. The wealth gap widens as people with assets, like property or stocks, can outpace inflation, while people with fewer assets struggle to keep up. Inflation, in a way, is one of the quietest ways wealth is redistributed. It's happening right now, whether we notice it or not. Here's the uncomfortable truth. Inflation isn't going anywhere anytime soon. It's a side effect of the global economy, and it's something we're all going to have to deal with one way or another. But what if we don't understand the full power of inflation? What if we're not prepared for the next wave of price hikes or the long-term erosion of our earnings? The question we all need to answer is this: how much longer can we rely on our paychecks to keep us ahead of inflation when inflation itself is quietly reshaping the very value of those paychecks? Think about it. Every dollar you earn today could be worth less tomorrow, and when you don't notice it, that's when inflation has its real power.